What if I told you there's a financial score controlling your life and you're not allowed to see it? There's another score, hidden, invisible, and silently deciding how much money you'll lose over your lifetime. Meet Jason. On paper, he's a lender's dream, a credit score in the high 700s. Never missed a payment, responsible with money. He owns 2 credit cards with a high limit and clears them every single month. He's held the same job for 4 years and earns close to $80,000 a year. So when Jason applied for a mortgage, he expected smooth sailing, solid income, strong credit, good savings. What could go wrong? Instead, the bank offered him a noticeably higher interest rate than his coworker, someone with a lower credit score and less job stability. When Jason asked why, the loan officer gave a vague answer: internal risk evaluation. No details, no explanation. What Jason wasn't told is this: the bank wasn't just looking at his credit score, they were judging him with the second score, one he's never seen. This hidden score was built using data Jason didn't even realize was being tracked. His public credit score said low risk. The internal algorithm disagreed. That disagreement cost Jason over $25,000 in extra interest across his mortgage. He'll pay it and probably never know why. He'll assume that's just how the system works. But that assumption is wrong. I'm Bobby. I spent months digging into the hidden scoring systems banks actually use, systems that go far beyond what Credit Karma shows you. If you've ever been denied credit without a clear reason, or paid more than expected, this is something you need to understand. Because there's a shadow system quietly ranking your financial worth. I call it the invisible score. Here's the truth most people miss. Your FICO score isn't the most important number anymore. It's just the only one you're allowed to see. Banks and lenders use internal models powered by hundreds of data points, most of them hidden from consumers. They don't just track how much you spend, but where you spend it. The same purchase at 2 different stores can send totally different signals. High-end furniture store, the algorithm reads stability. Rent-to-own shop, the algorithm flags risk, even if the price is identical. Timing matters too. Do you pay bills early or at the last minute? Spend mostly at night or during the day? Even your paycheck rhythm is analyzed. Consistent deposits signal stability. Irregular ones raise questions, and it goes deeper. Banks now buy alternative data, online behavior, app usage patterns, sometimes even location trends. AI underwriting companies openly admit they use thousands of variables, many unrelated to traditional credit history. Your education, career path, and job history may quietly shape how risky you're labeled. Even how fast you spend money after getting paid matters. Rapid spending triggers different risk signals than steady pacing. Subscriptions matter too. Automatic payments suggest planning. Random purchases suggest unpredictability. None of this is personal. It's statistical. Algorithms don't judge character. They predict behavior. The problem? These models are so complex that even banks can't fully explain their decisions. You're being evaluated by rules you can't see, data you didn't approve, and logic no human can fully explain. And bias creeps in, not through intent, but through patterns. Neutral data can still produce unequal outcomes. Everyday behaviors common in lower-income communities often get misread as risk. The system doesn't understand context. The cost adds up. Higher interest rates, higher insurance premiums, worse loan terms, even job rejections. Over a lifetime, the invisible score can quietly transfer hundreds of thousands of dollars away from you. You can't opt out, but you can adapt. Consistency matters. Predictability matters. Stability matters. Automatic payments, steady spending patterns, fewer financial shocks, all send better signals. And finally, demand transparency. Ask questions. Push for explanations. The system stays hidden because most people never challenge it. Your credit score isn't the full story. It's the decoy. The real judgment happens behind the curtain. Jason followed every rule he knew and still paid tens of thousands more. He's not unlucky. He's typical. Your invisible score is being calculated right now. With every swipe, click, and transaction, you may not see it, but it sees you. If this changed how you think about money, hit like and subscribe. I'll see you in the next one.